Hello, everyone. Welcome today. Thank you so much for attending. We really appreciate it. Hopefully a few more people will arrive. My name is Justine. I'm part of the Healthy Workplaces programme team. And if you haven't heard of our programme or your organisation isn't linked to it, then please do take a look at our website. And I'll put the links in the chat, but I'm pleased to welcome Claudine Bell today. She's from the Money and Pension Service, which is called MAPS, and she's going to let us know what financial wellbeing is and a little overview of the government-backed Money Helper website and its resources. So thanks so much, Claudine, for coming today, and it's over to you.
Brilliant. Thank you so much, Justine. Hope everybody's well and had a good morning so far. If you can't hear me or anything like that, just let me know. Justine and I were just talking about Teams and how it can be sometimes a curse rather than a gift. But my name's Claudine and I'm the South East Regional Partnership Manager from the Money and Pension Service. Just a quick bit of an agenda for today. First, I'm going to explain who we are and what we do at MAPS. Going to be looking at financial wellbeing and what it means. 4 steps that you can take to improving your financial wellbeing and how the Money Helper website can help with that. And then we'll take some questions at the end. Any questions that I don't know, what I will do is pop some links to answers when I share the slides. You will be receiving the slides with all the links, so you don't need to worry. And a recording of the webinar will be made available as well. So moving on, Money and Pension Service, who are we? So we exist to help people make the most of their money and pensions, and we were created under the Financial Guidance and Claims Act of 2018. We're an arm's length body of the government, sponsored by the Department for Work and Pensions, and we have a commitment to providing people with the information that they need to make effective financial decisions over their lifetime. We engage with the Treasury on policy matters relating to financial capability and debt advice, and we're responsible for improving financial wellbeing and helping everybody to make the most of their money and pensions. We're independent, impartial, and our service is free, and we like to highlight this so people can feel confident that our resources are trustworthy. So at the Money and Pension Service, we have 5 core functions. So money guidance, we want to enhance everybody's understanding and knowledge of financial matters and day-to-day money management skills. Pension guidance, we provide information to people about workplace and personal pensions. Debt advice, we're the single largest funder of free debt advice in England. Consumer protection, we work with the FCA to protect consumers against scams. And then strategy, we focus the efforts of the UK strategy for financial wellbeing. So I've mentioned financial wellbeing a couple of times now, and you're probably thinking, what exactly is financial wellbeing? Well, we have an official definition at MAPS, and this is it. So financial wellbeing is about feeling secure and in control. It's about making the most of your money day to day, dealing with the unexpected, and being on track for a healthy financial future. So in short, it's about feeling resilient, confident, and empowered. And we know that financial well-being and mental well-being are inextricably linked. It's a chicken and egg situation. Often, if your mental well-being suffers, your financial well-being suffers. And if your financial well-being suffers, your mental well-being suffers. And there are lots of statistics and evidence to back that up. Half of people in problem debt also report that they have a mental health problem. And 86% of respondents to a money and mental health survey said that their financial situation had made their mental health problems worse. So in both cases, to be either financially and or mentally well, you need to have the ability to function day to day and be prepared for life's challenges in the future. And I don't need to tell you that things are very difficult at the moment. And as a result, financial wellbeing is being impacted. As part of its Financial Lives survey, the FCA found that the cost of living is having an impact on people's mental well-being. Around half of UK adults are feeling more stressed and anxious due to the rising cost of living than just 6 months earlier. I cover the southeast of England, and the southeast of England has more homeowners via a mortgage than any other region in England. Figures from the Financial Conduct Authority show that around 1.5 million homeowners will come to the end of fixed rate mortgage deals in 2024. And the Bank of England estimates that around 5 million homeowners will see their monthly mortgage payments rise between now and 2026. Coupled with higher food prices and energy bills, the cost of living is something that a great many people will not be able to escape. So a good source of support and information to help you deal with the cost of living is via our Money Helper website. So we are the Money and Pension Service, but our customer-facing website is Money Helper. Here you'll be able to find free, impartial, unbiased support, information and guidance. And we like to say it's got information from pocket money to pensions and everything in between. So now we're going to look a bit more into the Money Helper website and how it could help to improve your financial well-being. So this is an example of what the website looks like. You can see the various headings on the top where you can get information. And we're going to go into a bit more depth into that now as we go through the presentation. Under the Money Troubles heading of the website, you'll be able to find our cost of living campaign. And here you'll find information and guidance to support you with the cost of living. Each of these articles is also available in a short video format, and you can download the PDFs as well. So just somewhere you can get a bit more information. The great thing about Money Helper is that it's not just a website. You can actually call for free money guidance. And if you didn't want to speak on the phone, you could use web chat or even WhatsApp as well. Lines and the chat is available Monday to Friday, 10 a.m. to 6 p.m. So if you're having trouble finding what you need on the website, or you want somebody just to explain it to you, you can call for that money guidance. So now let's take a look at some steps that you can take to improving your financial well-being and some resources on Money Helper that can support these steps. So now let's look at taking control of your money. So the first golden rule of good money management is to understand how much money you have coming in versus how much money is going out. Over half of UK households keep a regular budget, and most say it gives them peace of mind about how much they are spending and makes them feel better about life in general. Money Helper has a free budget calculator, which will help you to know exactly where your money is being spent. Knowing how to manage a budget and keep on track of where every pound is being spent is a great first step to starting your savings, getting out of debt, or even preparing for retirement. So the budget planner will give you a place to record all of your spending so you don't forget anything, and a breakdown of your finances by category. It even displays it visually, so you could find out that more of your budget is being taken up by unnecessary items, for example, than you realised. The budget planner will also give you personalised tips when you're finished, and you can download and save your results. As well as the budget planner, you could do the invisible spending exercise. This is where you might think of an item that you buy regularly, think of its approximate price, work out how often you buy it, and multiply it to work out its costs per week, per month, or per year. Here, you could find out that your daily coffee is actually costing you hundreds, if not thousands, by how much my latest cost off order was, how much it's costing you per year. And now you'll be able to make more informed choices about how you spend your money. So invest in yourself, take some time to really look at that budget and see if there's any way that you might be able to make some savings. The next step to taking control of your money is to prioritise your bills. So it can be difficult to keep track of all the payments we need to make in our lives. And sometimes we can be unsure of which bills need to be paid as a priority. So our bill prioritiser tool on Money Helper can help you prioritise and keep on track. So this tool has been designed for people who are worried about payments and just in that pre-arrears space. And this can help you to avoid missing payments. The tool can help to put bills and payments in the right order. So for example, if you're worried about paying your council tax or your car finance, the bill prioritizer will tell you that your council tax needs to be paid as a priority, no matter how scary the letter from the car finance company may be, or no matter the fact that you use the car every day. If via the prioritizer you identify that you're struggling, the bill prioritizer will tell you what to do in 2 easy steps before you miss a payment, and guidance on the things that you can ask for your creditors. A great method to use to ensure that you're not overspending and you've got money for those priority bills is the piggy banking method. It's actually a method that I use with my online banking. So what you do is simply set up different accounts for different priorities. So you could have an account for direct debits to pay those priorities bills. You could have an account for saving and an account for spending. This way, you can ensure that you never overspend on your direct debit account and money will be left for those payments. And then you can ensure that if you're spending out of your spending money pot, that money is available and you don't have to worry about dipping into other pots. So it's just an exercise you might be able to use, and there are lots of banking apps that can support this. So, as mentioned in the introduction, there's been a lot in the press about the new mortgage rate, interest rate rises. When your mortgage rate will change will depend on what type of mortgage you have. If you're on a variable rate mortgage, as soon as the Bank of England announces a rate change, your mortgage interest rate will go up or down too. With a fixed rate, interest rate changes only affect you when your deal is running out and you want to remortgage. You should contact your lender 6 months before your deal is due to expire and see what rate you may be able to transfer to when yours ends. The most used tool on Money Helper is our mortgage calculator, and it can help you to understand how a new rate can affect you. Remember to always contact your mortgage company if you're worried. There are options available to you, such as changing to interest only or increasing the term of your mortgage. And of course, you need to take your individual circumstances into account and speak to your mortgage company about what is available to you specifically and what will be right for your individual circumstances. So I mentioned earlier that we fund debt advice. So just to put that into context, as an organisation, we've invested over £83 million on the provision of free debt advice in England. Now, we know that there are over 9 million people in the UK who are in debt. And research shows it can take people 1 to 2 years to admit they have a debt problem and to seek out advice. We did some research into the barriers that people face when seeking debt advice, and the most common barrier was shame and embarrassment. Being in debt is nothing to feel embarrassed about. It's so easy to fall into that debt spiral. You spend more than you earn, you borrow to fill the gap, and then before you know it, all of your income goes towards repaying debt and you have nothing left. If you're struggling with debt, please speak to somebody. Free debt advice is available to you and it can be transformative for people. Debt advice is impartial and confidential. Your employer will not be notified if you access advice, so please don't put your head in the sand. Seek help. On the Money Helper website, we have a debt advice locator tool, which can detail local face-to-face services where you can get advice. Or you could refer yourself into our Money Advisor network, where you can access free telephone or digital advice and receive a call back from a fully qualified debt advisor within as little as 30 seconds. So I've put links on the slide, or you could scan that QR code on the slide to access debt advice. And please do share this with family and friends. Nobody has to suffer, nobody has to pay for debt advice, and it's open to everyone. So the next step to financial well-being is to make sure you're getting the money you're entitled to. So a great way to maximise your income is to make sure you're getting the money that you're entitled to. And a good place to start is to ensure that your tax code is correct. We have a section on the Money Helper website that helps you to understand your payslips and tax code. If you don't understand parts of your payslips or you think there might be a mistake, speak to somebody in the payroll section of your company. Please follow the link when you get the slides for more hints and tips on this as well. We also have a new benefits calculator. By answering 4 simple questions, you can get a quick estimate of what you might be entitled to from over £17 billion in unclaimed benefits and social tariffs. Now, while this isn't a guarantee of untapped income, the tool could uncover hundreds, if not thousands of pounds in unclaimed support. One thing to remember is that people who work can qualify for in-work benefits, so it's worth checking it out. As I'm sure you're aware, children are expensive, and you may be able to get help with certain costs or receive certain benefits in terms of children. You should also know your rights in terms of maternity benefits and have a plan in place for your finances on maternity leave, or if your partner is taking maternity or paternity leave. And again, I've popped all the links that make reference to these areas on Money Helper on the slides. So our next step is to plan for the expected. So the one thing that makes people feel more financially confident is knowing that they have savings behind them. So our research shows that 21% of people within the southeast of England wouldn't be able to afford an unexpected bill of £300 or more. An emergency saving pot is a great way to build financial resilience and feel control and confident. So if you want to start thinking about savings, Money Helper has a section of the website that tells you all about savings. There's also a savings calculator tool available, and you can use it to work out how long it will take you to save for something, or if you know how much you can save regularly, how much you need to save by a certain date. There's also tips on how to keep on track, and it will help you with goal setting as well. I personally had been terrible at savings, but I've recently joined the Roundup on my banking app, and I've actually already managed to save a few £100s. So this is whereby it rounds up payments to the nearest pounds and puts the change into a savings account. And it's a really easy, mindless way of saving and building up a pot. So there's lots of other ways you can save as well. You could even try a 1p a day saving challenge. And I know people, putting money in envelopes has become a new trend in saving. And that was 21% of people couldn't afford an unexpected bill or more in the southeast of England. Unfortunately, death can be an unexpected event in life. And you need to think about who will receive your pension in the event of your death. And you may also want to think about making a will. So a will sets out your wishes for your money and possessions on the event of your death. And we have lots of information and guidance on Money Helper about how to do this. So if you don't have any savings to fall back on, and you decide you do need credit or a loan, then you should consider seeking the assistance of a credit union. Now, before I joined MAPS, I didn't really know what a credit union was. I kind of heard of them, but I was a bit unsure. So credit unions are community saving and loan cooperatives. And this is where members pool their savings to lend to one another and that might help run the credit union. So a cooperative is an organisation which is owned by and run for the benefit of its members who use its services. So to get a loan from a credit union, you might need to have been a member for a certain period or have already built up some savings in a credit union account. In England, there's a cap on the amount of interest that credit unions can charge on their loans, and there are no hidden charges with credit union loans and no penalties if you repay the loan early. As with any lender, you'll be expected to pay your loan as agreed. And credit unions are regulated in the same way that major banks are, but they may be able to offer you smaller loan amounts, and they may be able to lend to people whose credit isn't as good and who may have been turned away from the high street banks. So if you haven't considered a loan from a credit union before, it may be worth finding out about one. And again, I've put a link on the slide to help you find your local credit union. So just continuing with planning with the unexpected life events. If you are unfortunate enough to be incapacitated and become unable to look after your own affairs, you may need to appoint a power of attorney. Now, this is something that you might want to consider, and we've got links on the Money Helper website to help you do this. Relationship breakdowns often have financial consequences, and we have a divorce and money calculator, that can help you to understand what financial impact your divorce may have. Divorce can also have a very large impact on your pension, and we have a dedicated helpline to help you understand how divorce can impact your pension. Unfortunately, scams are on the rise, and with the introduction of AI, it is becoming harder to spot scams. Money Helper can help you to understand the different ways you can be scammed and how to recognise them so that you're confident that you can spot one, and also let your friends and family know too. We've also got guidance so that if the worst does happen, you'll know what to do next and who to report the scam to. Again, we have a dedicated helpline for pensions and scams, which again is unfortunately becoming more popular. And I think the most important thing to remember is if it looks too good to be true, it usually is. And if anybody you know contacts you out the blue to request money, always hang up the phone and call that person personally. And if any of your telephone providers call you to tell you that you can save money on the bill, hang up the phone and call back the dedicated customer services number, not the number that they give you, which nearly happened to me, to check that it's legitimate. So the scams are becoming much more sophisticated. Don't get caught out. So next, you should look at securing your future. So pensions or retirement savings, which is a great way to think about it, they are important. And at just £221 a week, the state pension just isn't enough. Again, research shows us that in the southeast of England, 48% of people say they will not have enough to cover their expenses in retirement. The earlier you start, the better. You're never too young to start saving for retirement. And I would just like to highlight particularly to any women on the webinar, women tend to live longer than men and therefore will require more money in retirement. By the time a woman reaches state pension age, which is currently 67, they will have average pension savings of about £69,000. This is £136,000 less than the average man who would have saved £205,000. So I'd like to encourage women to start thinking about your pension, start looking at what you might be able to do to increase it, just to ensure you have enough for retirement. So everybody will have an in-work pension scheme, and you should consider joining this. We know that more people are sacrificing their pension to have extra money each month. But just to be aware, this could have a negative impact on your pension. So please do consider that carefully. If you have opted out, please ensure you have a plan to go back in and speak to your pension provider about this. You may have had more than one job and accrued different pension pots. And we have a helpful link on the Money Helper website that will help you trace your pensions. We even have a template letter on the Money Helper website that helps you chase your pensions. All you need to do is know your national insurance number and name of your employer. You can also speak to our pensions team for general queries about pensions. And as discussed earlier, we have dedicated lines for pension scams, pensions and divorce, and even pensions if you're self-employed. If you're lucky enough to reach the age of 50 with a UK-based defined contribution pension, so when we say defined contribution, it's normally a pension from the private sector, you can have a free PensionWise appointment, which is an in-depth appointment that talks you through the options of how to take money from your pension. So again, when you get the slides, please do have a look and follow the links. So you might be thinking to yourself, how much will I actually need in retirement? Well, we've given an indication of how much you'll need based on your lifestyle. And a quick look at the figures on this table will show that if you live in London as a single person, you'll need £15,700 and a bit less if you're outside of London. So far, as we've seen, the state pension gives you £221 a week, which equates to £11,492 a year. So as you can see, this does not even meet the minimum amount needed for retirement. You simply need to save more, and the earlier, the better. So just a reminder, there's a link on the Money Helper website, which helps you check the progress of your pensions and calculate how much you need to save for a comfortable retirement based on your individual circumstances. We know that pensions are something that a lot of people don't understand. They feel overwhelmed. Just take some time to understand it, speak to our team for free, and they'll be able to guide you where possible. So what can you do now? All I can say is, shift your mindset to including your pension when you think about your finances. So you probably think about your direct debit, your current account, your rent, your saving, your mortgages really regularly. And your pension should also be in those thoughts, and you should be checking its progress regularly. So just some steps: trace lost pensions, get your state pension forecast, nominate those beneficiaries if the worst were to happen, nominate who you would like to receive your pension in the event of your death. Use our pension calculator, use our budget planner to see how much you think you might need in retirement. And don't forget, you can call us for help. Our pension line numbers are open from 9 to 5, with the web chat open from 9 to 6. And you can get general pension guidance. If we think you need advice, we will let you know, and we will tell you where you can get advice from. We'll signpost you to an independent financial advisor. And just so you know, there is normally a charge for advice from an independent financial advisor. So just finally, I just wanted to share that we've recently launched our Money Midlife MOT tool. So the Midlife MOT tool is a tool that's designed to help people assess their current financial situation and plan for the future. So it asks a series of questions about your finances, covering debt, budgeting, emergency and non-emergency savings, insurance and pensions. It then produces a personalised report, which will help you to identify what to prioritise, and with links to guidance on how you can improve your financial well-being from midlife through to retirement and then also later in life. So the tool can be used to identify actions to improve your finances according to your priorities, and it can help you to plan for the future to make sure that you're staying on track to achieve your goals. So they say that this tool works best for people between the ages of 45 and 65, living and planning to retire in the UK. You don't need any documents or information to use the tool, and it takes about 5 minutes to complete. The information that you provide will be kept completely anonymous, but you can download your results so you can refer to it later. So it could be a good place to start looking at your financial well-being. So we've come to the end of the presentation now. Just like to round up with a quick summary. So the 4 steps to financial well-being. Number 1, take control of your money, prioritise those bills, piggy bank, ring fence that spending to make sure you're not spending for those priority payments. Create an emergency savings pot. Get the money that you're entitled to. Make sure you're being paid correctly. Have a look at our benefits calculator. You never know. Plan for the unexpected, death, divorce, and scams, and secure your future, save for the long term, save for retirement. I hope you found that useful. I'd now like to take some questions. And what I will do is any questions that you ask today, I'll amend this slide to add links to your questions so you can do further reading on it. But yeah, over to you. The floor is open for questions.